have with me David Schaefer. He is managing partner of Loeb Loeb. Thank you so much for being here.
Thank you. It's a pleasure.
I want to start out by asking you, looking forward into the next year, maybe 2 years, what do you think that sellers and advisors should be preparing for? What should they be looking at?
Well, I think 2013, at least in for the lower middle market, will be a generally favorable marketplace. I think that there will be a lot of opportunities for sellers of good companies to take advantage and either sell or recapitalize their businesses, take some money off the table, so to speak, and invest it elsewhere. I think companies that are challenged will continue to have a harder time, and so they'll need to do more to put their businesses in shape. After 2013, a little hard to say.
Yes, you need the crystal ball, right?
If I had that, we would be sitting on my yacht.
That would be nice. I want to ask you about interest from non-U.S. buyers. Are you seeing more interest in general, and are you seeing the deals getting done? And if you are seeing the deals getting done, what's making them, where's the success coming from?
Well, there is a lot more interest, but the level of deals getting done is not commensurate with that. I think you have to look at it sort of different parts of the world. It's hard to generalize. We are seeing a lot of increased activity with Canada. In particular, Canadian economy is in relatively good shape. The Canadian dollar and the U.S. dollar are sort of, even. Great transportation, a lot of synergies. We speak the same language most of the time, so there is a fair amount of activity. Europe is very, very challenged, with the exception possibly of Germany. So there's really little to no interest in Europe in coming into the United States, although there may be people with money moving for a safer haven, but not necessarily to invest in U.S. companies. Japan has had increased interest, as well as, I think, increased deal making, and I expect that will continue. I think in China there is a lot of interest in diversifying into the United States markets.
And that's staying.
And I think that will continue, but there are not a lot of deals getting done. A lot of interest, but not a lot of deals. And I liken it to the era of the early to mid-'80s, when Japan was learning how to invest in the United States, and the U.S. companies were learning how to deal with Japanese investors. I think we're kind of at that stage with China. So I think we're at the beginning of a long development process. But I think it'll happen.
Just one more question then. A lot of these smaller to mid-size companies that would like to be acquired, they're often run by families. What sort of advice can you give to them if they are sort of preparing themselves to make some deals? What's the best sort of takeaway you can give to them?
Well, I think it obviously varies. It's hard to generalize, but I think a lot of family-owned businesses were started and maybe in the second or third generation with the idea that it would always be a family-owned business. And I think the way you run a business that you think will be in your family forever versus one that you are building and at some point plan to exit is different. And the average entrepreneur or family business is not really well equipped for that process. They're certainly capable, but they're not built for it. So you need a different type of advisor. You might even need different, not just financial advisors and business advisors, but maybe even different accounting firms and others to put the company in a position where it will be attractive to strategic and financial buyers. And that's a process, and it's distracting, and it can sometimes be expensive. So not something for the faint of heart.
So be prepared.
Be prepared.
And get your team in place.
Yes. Conversely, for companies that don't have the type of professionals who are accustomed to dealing with people who are emotionally attached to their business, need to remember that they're not acquiring businesses from, they're not public companies. These are not private equity-backed enterprises. They're dealing with a different animal, and so they need to be prepared too.
Right, both sides.
Absolutely.
We have to leave it there. David Schaefer of Loeb Loeb, thank
Great.
you so much for your
Thank
time.
you. My pleasure.